Over the last couple of years, interest rates have gone absolutely nuts. And what that means is if you're thinking about remortgaging your property, that means your remortgage rates are significantly higher. And even if you decide not to remortgage, you come off a fixed deal, you're finding quite often that the amount that you need to repay each month is now much higher. So the question is, do you remortgage now or should you wait a couple of years? Hey, if you're watching my videos for the first time, my name is Saj Hussain, and on this channel I share with you my 15 plus years of property investing experience to ultimately help you get further faster in your own property investing journey. Now, when it comes to mortgages, I've got to do a quick disclaimer and say, look, I'm not a financial advisor. I can't give financial advice. What I'm doing is really sharing my experience for educational purposes. When it comes to remortgaging a property, many people, and it's been quite a trend, for property investors, what they'll do, they'll purchase a property, they'll wait for the prices go up a little bit, they'll remortgage that property again, maybe take some more money out, or sometimes they'll just juggle around between different mortgage products to stay on a fairly low rate. Because when you take out that mortgage for the first time, often what you do, you get a discounted rate or some kind of advantage of being able to take that deal at the beginning for a year or 2 years, or sometimes called the honeymoon period. And after that period expires, you go on to whatever the lender's normal rates will be. And those normal rates are often higher than what you'd been paying for the last 1, 2, 3 years. And at that point, some people will take the opportunity to switch again, either to another lender or another mortgage product with the same lender, in order to really be able to get those rates down again. You go into another honeymoon period for another fixed period of time. Now, there's nothing wrong with that if that's what you want to do. And one of the things you have to be mindful of, there's usually fees involved in doing that. So when you're switching your mortgage product or change to another lender, you might have solicitor's fees if you're changing to a different provider altogether. You might have a product fee to be able to get into a new product, even if it's the same lender. You might have a valuation fee, particularly if you're moving to another lender. You might have a broker fee as well that you're having to pay for brokers organizing this for you. Now, when we take all that into consideration, we need to look at the true costs or the true benefit we might incur by moving that mortgage again to another product. So some people, what they will do, they'll let the mortgage expire, go on to the regular standard rate or what's known as the standard variable rate for many lenders, and then stick with that. And that rate is often determined by whatever's going on in the market. The thing is, right now, and especially over the last year or so, we've seen mortgage rates go completely nuts in terms of the rates have risen quite significantly compared to what they were, say, only a year ago. And what that means is for many people, particularly if they're on the standard variable rate, their rates they're paying now are maybe twice what they were paying a year ago. And in some cases, that also means it becomes unpalatable as a landlord, as an investor that's holding property and that has a mortgage on that, for the levels that you have to pay versus the income that you're getting. If you do find yourself in one of these positions where maybe you purchased or mortgaged a property a couple of years ago and now you've come off that rate, that fixed period that you might have had or discounted period, and you've come onto the lender's standard variable rate, it's quite a shock when you see what the new rates are. So many people, what they're doing is looking, okay, how can I now remortgage to a different lender, a different product, to be able to get that rate down, just like I was saying earlier on. The challenge, however, is when people are looking around to see what else is available, and I suggest if you are doing this, that you use an independent whole of market mortgage broker, because I think that a good broker is worth their weight in gold, because they can place products for you with the right type of lender for your situation, often save you more money than by you doing the guesswork yourself. I know you can use comparison sites and just pick what looks like the lowest numbers, but often a good broker will certainly save you money and add value to what you're doing. So when they look at what's available for you in the marketplace, and let's say you're choosing another lender that you're moving to because the rates might be lower, and you work out the figures that they're offering you, the challenge sometimes is because the interest rates are quite high right now. What that means is the rental expectations need to be higher, and if that doesn't quite meet, or there isn't a sufficient gap between the two, what will happen is the lender will offer a lower loan to value, offer less money. Now, if you've already got a mortgage, let's assume you've got £100,000 with one lender, you're moving across to another lender, and that lender has offered you not 100, but say £90,000. Well, that means the only way you can switch to that other mortgage would be for you to put £10,000 in to the property, i.e. put more equity in order to be able to switch over to that mortgage. And for some people, that's not possible as well. And when they're doing these calculations, they're also taking into consideration affordability, because things are costing more. So for example, for HMOs, if you're doing HMOs like us, when the lenders and the surveyors are looking at your costs, they're building in a higher cost for your utilities than maybe before, meaning that your expenditure is higher, so the overall money that they're prepared to lend you, i.e. how they determine the value, will reduce, so the amount of money you can borrow will reduce as well. So it's not just the fact that interest rates are higher right now and you're trying to find an alternative, it is also a challenge in terms of how you can borrow. Now, at the moment, we're in a situation where the market's a little bit chaotic, and particularly a few months ago when the lenders were panicking, withdrawing products because they weren't quite sure what's happening in the markets. There was like free fall of the pound to the dollar in terms of value as well. All this chaos in the market is creating a huge amount of uncertainty, and lenders don't know what to do. There's somewhat settling of the market starting to happen right now, and in terms of what will happen over the next few months, over the next year or so, personally, I think we're probably still going to see another interest rate rise. Rates will still increase, but I think there's a sufficient margin that lenders are built in now compared to the price they buy money in at to what they lend out to us in terms of in the marketplace, that the lenders will settle in terms of rates, and we probably are unlikely to go back to anything close to what we had historically in terms of over the last few years, because let's face it, they're the lowest interest rates for 300 years that had happened. So we're not going to be going back there. So that was an unrealistic environment. What will be going on to something more reasonable, probably lower than what it is now. This is just my best guesstimate of what I think is going on in the marketplace. Now you have to then make a decision. Do you make that change right now and commit to another mortgage of 2, 3, say 5 years that you're fixing, or do you stay on your standard rate right now, ride through this wave for another few months, 6 months, a year, and as the market settles, and then move on to a product at that point? Only you can best determine that, and by sitting down with an independent broker, they can probably give you some advice and guidance in terms of what's available in the market and what might suit you. There's many people involved in the property investing space or wanting to get involved in the property investing space, maybe in their 20s or early 30s. They've never really experienced interest rates any different than what they've been over the last few years, because it's probably been 15 years since the interest rates were maybe in the region of 5-6%. And I remember when we first got started in property, that's about 15-16 years ago. At that point, when we were doing calculations to understand whether a deal works and how to do a deal, a lot of our calculations were based on a default mortgage rate of say 6%. But today, 6% may not even be enough to be able to make a deal work. Sometimes it needs to be 7 or even higher for some deals, just to do the calculations to see if that deal stacks. And that's quite a shock for somebody over the last few years who's only seen rates of say 2, 3, or maybe 4% tops, and you jump into 6 and 7s. So as I said, it's quite a significant change. And what we were in before really was a bubble. It was artificially created where the rates were reduced so much really to stimulate the market, stimulate the economy. And now really we're trying to pull that back. The rates are being pushed up because inflation is quite high. The Bank of England wants to try and get inflation under control. So there's still a little bit more to go before we actually see that. We just peaked at 11% on inflation. I think we're starting to head in the right direction with an inflation reduction, which is why I think rates will settle. But we've got to wait and see what happens. If you've enjoyed this content, I'd really appreciate if you click on my face over here to subscribe to the channel if you're not already a subscriber. It really helps us out in terms of getting this content to reach more people. And then what I've got lined up next for you is a video over here which explains exactly how buy-to-let mortgages work. So I look forward to seeing you on this video next.